Good morning, everyone. Welcome to the Daily Commodities and Currency Podcast. This is Manish Sharma taking you ahead with all the updates which happened yesterday as well as the outlook for the day. So let's start. Talking about the gold first, we have seen historic $4,000 an ounce levels in the spot markets today. Prices have crossed those levels as we have seen that the precious metals advance have been reflecting a deepening market anxiety. Investors seeking refuge in the safe haven assets where prolonged United States government shutdowns as well as mounting speculation that there will be future interest rate cuts in the month of October as well as in the month of December have been driving historical flows into the precious metals. We have seen that gold prices have also been supported by geopolitical tensions as well as expectations that central bank is going to drive the overall demand, where China has continuously been buying the gold for the last 11 consecutive months. Outlook for the day is like in the wider context, we still see gold continuing to hit record highs in the medium to long term basis, with markets also pricing in back to back rate cuts as well as persistent geopolitical tensions and steady central bank buying could is again expected to support the precious metal on a longer term basis. On a near term basis, we still see various developments happening on the US shutdown. Macro cues continues to get delayed, and that is creating a wave of uncertainty. While there will be Fed Chairman Powell's speech, which will be due tomorrow, that will also be eyed for further short-term direction. Overall, gold is expected to stay positively biased in the near-term perspective. Now let's talk about the base metals. Base metals have extended their upward momentum yesterday. We have seen that it has been supported largely by technical buying and sustained investor interest. Copper have climbed to around $10,788 per ton levels on the LME. It is inching close to its all-time highs. On the highs hit at around $10,800 per ton levels. Aluminum has also advanced to $2,730 per ton, while zinc has surged to almost $3,047 per tons on the LME. Most of the upside which we have witnessed yesterday have been came during the US trading hours, which is reflecting strong global appetite for the sector. China will be closed today as there are holidays in China. Regional participation remains muted in China. Base metals are expected to extend its gains today, where the rally looks more momentum driven, supported by fundamentals also, and also the macro cues like the dollar has been weakening. Moves have been often proved to be short lived, but there will be volatility in the base metals complex in the short term perspective. All eyes now remain on the reopening of the Chinese markets, which could test the recent optimism, while early signs of weak holiday spending and tourism may weigh on the demand sentiment in the near term. For now, we see prices remain firm, with charts also pointing towards an upward momentum trajectory. But traders should also stay cautious as the rally is again showing signs of overheating. Now, talking about some energy updates about the crude oil. Have seen that oil prices were largely steady on Tuesday, where markets have weighed OPEC plus smaller than expected November output hikes against the sign of growing supply glut. Brent had settled at around $65.45 per barrel levels. It's down 2 cents, while WTI crude oil had edged up 4 cents at around $61.73 per barrel levels yesterday. The group modest 137 barrels per day increase had signaled that there is continued caution amid rising global inventories and record US production. EIA now expects that it will reach to around 13.53 million barrels per day this year, while around 123 million barrels per day built in the global oil stocks during the September month is reported, which is reinforcing that there are oversupply concerns in the market. Oil prices are likely to stay range bound in the near term as there is modest OPEC plus output height, and the record high US productions is keeping supply abundant and is weighing on the sentiments. Offsetting this support from the steady fuel demand, there are concerns of a slight upside, but overall the fundamentals are on the negative side only. Latest API data have shown that there is a rise in the crude stock, which is signaling potential demand weakness, while falling gasoline and distillate inventories are offering some cushion to the prices on the downside. with the EIA projecting that US output and cautioning on the rising inventories. Upside for crude remains limited on short-term perspective, which will keep the WTI crude oil briefly capped around the $64.5 per barrel levels on the higher side. Talking about something about currency markets, we have seen RBI intervention coming in this week. RBI has continued to set a floor below the 89 levels in the rupee. And we have also seen that foreign investors have been selling the Indian equities, where in the month of September, we have seen that investors have pulled $2.7 billions from the local share market in the last month, with a chunk of outflows coming from after the US have hiked its H1B visa fees. Market sources have revealed that Indian Central Bank had likely conducted some dollar rupee buy-sell swaps alongside intervention in the local OTC markets to support the rupee. Under this buy-sell swaps, the RBI generally undertakes delivery of the dollars at the spot rate, which will be reversed at some future dates. As a result, the dollar rupee forward premiums had pulled back, and we have seen that the 1 year implied yield retreating 6 basis points to around 2.23%, which is the lowest in the month. Because of that, the rupee have been expected to trade very range bound in the near term. So I think this is all about the currency and the commodities market updates. I hope you have gone through these updates, and I personally wish you a very successful trading day ahead. So thank you very much.